Hi everyone, welcome to Vortexa's first ever MENA Energy Insights. In this July 2024 edition, you're joined by myself, Jay Maroo, Head of Market Intelligence and Analytics for the MENA region. So in this edition, we're going to be covering a few things about the market. Namely, we're going to be covering some of the main trends that we're seeing on sweet and sour crude, the difference in supply East of Suez and West of Suez, and its impact specifically on Middle East producers. We'll also be talking about the falling Middle East crude exports and a weaker pull from India. And then we'll look at some of the latest trends with Iran and how that relates to its position within OPEC, especially in comparison with what's happening with other producers such as Kuwait and Nigeria. On the product side of things, we'll look at what's happening with fuel oil, especially in Saudi Arabia. And then we'll also close up by giving some insights into what's happening on Suezmaxes and VLCCs, with them cleaning up and its impact on middle distillates export trade. So without further ado, let's get into the presentation. And let's start with looking at what's happening on crude. And within crude specifically, I want to talk about what's happening within the Pacific Basin. And what you can see on our first slide is the breakdown of Pacific Basin sour crude imports, so mainly medium and heavy sour crude imports heading into Pacific Basin versus those that are sweet. And two main trends emerge here. So on one hand, you've seen pretty flat sweet crude imports into the Pacific Basin for quite a few months now, whereas sour crude imports have been rising since September 2023. However, they still remain well below levels that we saw at the start of this year. And you can see that red arrow pointing upwards on the left-hand side chart on the axis, showing that we're still about 1.5 million barrels a day below the peak of Pacific Basin sour crude imports. So part of that is driven by weaker demand from China, especially, but we're also seeing lower imports of sour crude imports from the Middle East, especially from other buyers, which we'll talk about later on in the presentation. Being in the MENA region, obviously one of the main producers, one of the main sources for sour crude is the Middle East. And what we can see is even though the sour crude imports by the Pacific Basin have gone up, the Middle East share of that market has actually fallen. And so you can see on the right-hand side chart that flat, steady decline, which we've seen in recent months, and especially in June this year. And what that really shows is that other sour crude producers outside of OPEC are really gaining a share into the Pacific Basin market. Now, if we turn over to the next slide, we'll look at what's happening in the Atlantic Basin. And here we also see another theme of sour crude tightness emerging as well. So here what we've done is we've looked at our crude inventory levels. And you can see on the left-hand side, what we're doing is comparing Atlantic Basin storage volumes with Pacific Basin storage volumes. And the difference here is that the trend for both may be falling somewhat, but the decline in inventories in the Pacific Basin is much sharper in recent weeks than it has been in the Atlantic Basin. And that's a little bit unusual because the Atlantic Basin has been coming back from peak refinery maintenance. And so you would expect to draw down there, but the drawdown has been very minimal. Now, if we look at what's happening with crude flows into the Atlantic Basin, once again, we look at this breakdown between sweet and sour crude, and we can see less and less sour crude is going into Atlantic Basin, and sweet crude continues to flow in. Now, going forwards, given what we discussed earlier on about this big gap for sour crude imports heading into Asia, it could mean even more tightness in the Atlantic Basin for sour crude, particularly Middle East crude, with more and more sweet crude heading into the region instead. Now, let's move on and talk about the Middle East specifically. And in our latest data for June, what we see is quite a significant decline in the Middle East crude exports. And this has been led almost primarily by Saudi Arabia. So you can see on this left-hand side chart, we've fallen below this kind of 16 million barrel a day mark in June. And the main cause of that is a decline, as you can see in the blue bars on the left, with Saudi Arabia. Now, it's very interesting to see the timing of this decline in Saudi Arabia's exports. It's come at a moment where, in general, global crude inventories are looking like they are heading into drawdown mode. And it's also come at a time where, in general, crude oil prices seem to be picking up a little bit. and at a time where backwardation within the crude markets has strengthened as well. So when we look at where the decline in Saudi Arabia's exports materializes, we can see a few different things. We can see fewer exports heading to some of the key Asia buyers. We can see fewer crude loadings heading towards Sidi Korea, which is the start point of the Sumed pipeline, which ultimately feeds the European market. And we can also see fewer intra-movements as well between Saudi Arabia. But focusing on the first part of that point, fewer exports to some of the key Asian markets, we've got one example here on this right-hand side chart, which shows just how steeply Saudi Arabia's exports to India has fallen, especially. So if we look at this right-hand side chart, if we look at India's total crude imports, we can see that they've stayed fairly steady since January 2022. But what's changed a lot is the rise of Russian crude into the Indian market. And that has really backed out the share of Saudi Arabia, as you can see in this red line. So that's happened with India. And to some extent, it had happened with China, but in recent weeks, less so. And actually, in China, what we're seeing is just a general weakness in crude imports rather than a shift, as we see in India, from Middle East to Russian supply. Now let's stick with crude, but let's talk about Iran. And looking at our latest data for May, we've seen an interesting development with Iran's position within the OPEC group. So we've seen in May, with our export data, that Iran has actually overtaken Nigeria and Kuwait to become the fourth largest exporter of crude in OPEC. And what we can see is the difference in trends for Iran versus Kuwait on the left-hand side and Iran versus Nigeria on the right-hand side. So Iran's exports have actually hit this 1.7 million barrel a day mark in May, and in June it looks like it's going to stay at a similar level. That's been aided by rising production, but it's also been aided by a growing fleet to carry these cargoes into primarily China. Now, in comparison, what's happened with Kuwait and Nigeria is that their exports have fallen, and they've fallen to the point where they're now below Iran's levels. And at the same time, they've also increased product exports. And that's exactly what this next slide is about, which is about the impact of some of the new refinery developments, namely Al Zour in Kuwait and Dangote in Nigeria, alongside Duqm in Oman. And collectively, these three refineries have really shifted the supply and the exports of crude towards products. And so if we look at this left-hand side chart, we can see really how steep this decline is. We can see a steady drop in this red line from about 3.8 million barrels a day to 3.2 million barrels a day of crude exports from Kuwait, Nigeria, and Oman collectively. And at the same time, on the product side, we can see just these three refineries on their own have contributed now 700,000 barrels a day of products into the market from virtually nothing at the start of January 2023. Sticking with the products theme, obviously it's really hot now in the Middle East, and what that means for many countries, especially Saudi Arabia, is lots of AC air conditioning running, lots of fuel oil imports, lots of fuel oil consumption. And what we can see in our latest data for June is that actually net fuel oil imports for Saudi Arabia have hit their highest that they have in quite a few years, in line with seasonal trends, but actually just above previous seasonal highs. And if we see where that fuel oil is coming from, on this right-hand side chart, we can see, as usual, a lot of the fuel oil is coming from Saudi Arabia's existing refineries, but we also see the re-emergence of fuel oil coming into Saudi Arabia from Russia and other sources of supply, such as the UAE and Iraq as well. So this is likely to pull upon especially the high sulfur market in the region, but it's going to be a short-term phenomenon. And as we can see on this left-hand side chart, the seasonal trend suggests that these import levels kind of decline in about August, September, October onwards. The final phenomenon I want to talk about today is this trend of switches from dirty to clean trade, especially on larger tankers, such as Suezmaxes and VLCCs. So we had seen at the start of this year, Aframaxes were doing the switch up from dirty to clean. But now more recently, we've seen this happen on even the very largest tankers, Suezmax and VLCCs, which are almost exclusively used for crude trade. Now, what's triggering this is the difference in rates for clean versus dirty. And as of early July, we've seen 11 Suezmaxes that have made this trade, and only one of these are maiden voyages. So in previous times, what we'd usually see is new build Suezmaxes and new build VLCCs carrying clean products just for their first journey before their tanks became dirty. But now we're actually seeing older vessels clean up and carry clean products instead. And when I say clean products, I mean mostly diesel and mostly jet. And this is of crucial relevance for the Middle East market, especially because as we see in this next slide, we can see more and more diesel is being pumped out from the Middle East, and we can see more and more of this diesel is being pushed towards the European market. So Saudi Arabia has been generally lifting diesel exports, as has the UAE and Kuwait, as we mentioned before, especially with the startup of Al Zour. Now, if we look on the right-hand side chart with the share of European imports, that's hit 35% so far in June. And that could be facilitated even further by Suezmax and VLCCs because given the issues with the Red Sea transit, using a Suezmax or VLCC and taking the long route around the Cape of Good Hope is much easier, much more feasible than it would be through the Suez Canal. So that's it for our first edition of the MENA Energy Insights report. Thank you for tuning in and see you in the next session.